What's up, everybody? This is episode 24 of the Beyond the Edge podcast. We got a full cast with us today. Declan, married man. He's now joined the leagues of the Hitched podcasters along with Trend Tracker here. Pete, I'm following suit next summer. But in the meantime, we got a lot of tech news talking about today. A lot of tech and streaming. So we're going into the TKO, recent deal that they cut with Paramount. We've talked about TKO. That's the owner of WWE and the UFC, if you're not familiar. We've talked about them in the past. Pete's definitely going to be patting himself on the back for this one. Aside from that, we're talking about OpenAI, new model, ChatGPT 5, mixed reviews, companies. Valuation is going up, though, that's for sure. Finally, staying on the tech theme, we're going to be digging into Meta. Declan's opportunity to pat himself on the back because he's been in love with this company forever. Zuckerberg has been putting gazillions of dollars into all kinds of experimental projects for years, not always working out, but seems like the AI push may be having more promise than other initiatives. So let's just get right into it, boys. I want to talk about TKO. Pete, I'm just going to give you the floor a little bit here. You kind of brought this to our attention now, but also even years ago when we talked about it. What's happened since we covered TKO back in the time when, I think it's when Vince McMahon, like this was pre-documentary, but very much post him being a bit of a deviant. And we called him out on the show. The stock has surprised us. Pete, take it away. What do you think?
So two tales there. I'm sure if you guys look at the podcast videos here, you can go back to when we talked about TKO the first time. And Kev let me know about the Vince McMahon drama live. So you can see my live reaction to hearing that after really complimenting the company in a lot of ways. Yeah, it was almost just like tanking completely in the background, just like red, because I wasn't looking at it live. But that news had come out. But since then, positive news about the business itself is TKO Holdings, which you mentioned, is the owner of the WWE and UFC. UFC announced a $7.7 billion streaming deal over 7 years with Paramount Plus and CBS also ending the pay-per-view era. So the stock had hit $191 today. And I think when we covered it, it was shortly after the initial IPO and had dipped down into kind of the mid 70s. And I definitely will pat myself a little bit on the back. Don't worry, Declan, you'll get yours on our next topic. But I was definitely kind of all in on this. I still think it's actually a pretty good long-term hold now with the fundamentals of secured revenue for 7 years, just for the UFC, which if we remember when these two combined was worth far less than the WWE as well. So I think it's really great for the company. It's great for shareholders. There might be mixed reviews on what it means for fighters because that is an ununionized league, which is probably better for shareholders as well. So this has done, I think, a lot of good things. I think when the news first came out, it went up 20% yesterday and still climbing today at the time of this filming.
Yeah. Well, there's lots to like about the deal. But, Mr. Fundamentals, Declan, like, what do you see? Obviously, the revenue is significant, 7.7 billion. So it's just over $1 billion a year compared to what they were getting with ESPN, which people are guessing was about half of that. The mix between pay-per-view and the streaming rights is, I guess, proprietary. I couldn't find that information, but it's about $500 million a year. What do you think about this deal? How does this change things from your fundamental point of view?
Yeah, well, first thing, I think it just secures long-term greater predictability overall for the business. When you're pulling in $1 billion a year now for the next 7 years just from this streaming rights opportunity, I think that's always a good level of security for any investor. And just looking back at the business and even how they've progressed financially over the past couple of years, everything is trending in the right direction. And it's pretty easy and clear also that UFC as well as WWE have gained a lot of notoriety and continue to grow their brands. So I think it's very strong overall. And more than anything, I think it just comes down to a valuation standpoint. And I think they're relatively positioned well. But when you look at that valuation right now, their PE at this current moment is about 76. So you got to kind of ask yourself, is this a good buying opportunity at this time with such a high valuation? Maybe not, but who knows? If they continue to grow and position this, I definitely feel optimistic overall about the business.
Over 70 times. You don't happen to know what that figure is for like price to revenue, would you? I didn't even look that up, but I'm curious.
Yeah, it looks about a five time price to sales there.
Okay. So that's a little more palatable. We'll wait till we talk about OpenAI later. But that's interesting. You said that WWE popularity is growing. Is it still on the way up?
I think it's
Do either of you get it?
I was just going to say it benefits, I think, bringing on household names, even Logan Paul, have helped increase their reach to younger audiences. And I think both brands really have a strong and sticky customer base overall. People look at this and they grow attached to the various characters and fighters. And so there's almost a cult-like following, which is unique in some sense to other sports leagues. So from that standpoint, I think there is an enduring prospect about this business that makes it really attractive from that standpoint.
What do you think, Pete?
Oh yeah. I think to answer your initial questions on is WWE growing, I think what's actually interesting about them is they were able to split up their products. WWE has a lot more offerings, and their WrestleMania and as well as a few other big events did actually go to ESPN. And then I think they have their Monday Night Raw, which is on Netflix. So it's still a very big brand. And I think they can do more events. I think what was interesting about the UFC, and I think they had to do this deal because of what was happening, and we don't get to see all those pay-per-view numbers. I have a hunch they were dipping quite a bit just because they were trying to figure out, I think, internally over the last 18 months to maximize this deal, how to show that they could be 52-week-a-year business, which that means you kind of had to dilute some of those pay-per-views. And as a fan myself, I actually stopped purchasing them because there's one good fight, and they were always saying they didn't, being boxing. I don't know if you guys are boxing fans at all, but to a casual boxing fan, you have no idea who's on the undercard, the main event, that's it. Right. And you see these guys fighting beforehand and you're like, who are they? And the UFC wasn't that. The UFC in those pay-per-views, you had 5 big fights. That started to dwindle. I think the pay-per-views really started to dwindle. But alternatively, you could see them switch their model that they were starting to ramp up every fight on a Saturday night. And it's really, with bigger guys, I think it's a really tough model in that sense, because the same guy that wrestles in WWE who can wrestle maybe once or twice a week or multiple times a month, that's just not possible in the UFC. Right. These guys are taking some real damage and need many months off in between fights. So I think it's interesting that I think they definitely repositioned. I think as a fan experience now, I already got Paramount Plus. I don't know if you guys watched Yellowstone or Landman, great show. So I think getting UFC now basically for me for free is amazing. I think that's great. I don't have to pay $600 a year to be a fan.
I mean, I'm curious. So they potentially sacrificed some numbers on the pay-per-view side of the business. It's just an estimate, but people are saying it's roughly 300 million streaming rights, 250 million is their cut from ESPN on the pay-per-view. So no matter how you slice it, 1.1 billion a year is just more. I guess the big loss would be, what if they have some absolutely blockbuster fights coming in? One fight can make hundreds of millions of dollars. So I guess that's a downside. But then the pro is, you said, you already got Paramount Plus. Now you're probably going to tune into everything. They're probably going to expand their audience significantly. You guys can both answer, but Pete, I'll throw it back to you. What do you think? Killing PPV, is that expansion of the UFC audience? Do you think it's going to net be
big
worth
time.
it? Yeah.
Big time. I think, because you have to commit. Yeah, it's not if you're an NHL fan or an NBA fan, you have to pay behind a paywall to watch the finals, right? Right. So I think you get predictable revenue that you can plan against, right? So now you can really know how to scale your business. I think it's going to expand the audience in a huge, huge way. And then there's also significant risk about those big fights of guys pulling out, right? So let's say a guy doesn't make weight the day before, you could lose hundreds of thousands of buys, right? You're like, oh, that's not the fight I want to see. And people just didn't have to buy it. And they didn't have to buy it till 5 minutes before the fight. That was usually kind of the way I would do it. So I think it's great for the business. You have to imagine, I think the number one buys was 2.2 million or something around there, 2.2 to 2.4. Multiply that by $60. Yeah, it's good for sure. But you're getting that now consistently, 1.1 billion a year. I would do that deal all day and ditch the pay-per-view model.
Yeah, I guess I would say that it is a solution, but it's not necessarily the solution. So I think from a pay-per-view standpoint, and just talking both with my friends and consumers in general, is sometimes it's frustrating when you have to drop $150 to watch an event. And like Pete said, if somebody drops out of a fight, then you're kind of out of the money, especially if that's the person you want to watch. So from a streaming standpoint, I think it is beneficial because now you get that greater level of security and predictability That being said, will it convert everybody over to want to subscribe to Paramount Plus? I don't know. The big problem, I think, nowadays, and I was listening to the Lex Friedman podcast, I can't remember who the guest was, but he talks about how now we're kind of evolving in this state within streaming that it dominates everything. So every sports league now is tied to some form of streaming platform. And when you have like 5, 6, 7 different streaming platforms that are all offering the things that you want, and perhaps from a consumer standpoint, you don't necessarily want to buy them all or subscribe to them all, that still causes a problem in itself. And as a consumer, you're almost left to decide what you want to do. The other side of it, I think, is that one way or another, because there's all these walls in order to actually access the entertainment that you want, it incentivizes people to also do pirating and find alternative sources that are free. So it doesn't necessarily mitigate that. And for perhaps a consumer who is already doing that, it's not necessarily going to change. So I think from that standpoint, it's not necessarily going to resolve all the hurdles and probably the difficulties that the UFC or WWE have faced, but it adds that level of predictability that I think is at least going to give them greater security, and then perhaps hopefully the fighters themselves actually benefit from this new deal as well.
Probably not.
Yeah. They don't have a union. I think actually what was actually blocking, I think, this deal a little bit was the lawsuit from some of the previous fighters. So there's a bunch of guys who are actually getting paid out because they did win. They didn't get a union or anything like that. But I think they looked back at the numbers and were, yeah, you guys should really be making more than that. So some guys are getting some back pay just so they could have moved this through.
Well, that's good. That is good.
Yeah. Declan, I agree with a lot of things you said for sure, but those sound Paramount problems now, not UFC problems. Someone's pirating. The UFC deal's done. So, and I will say one thing though, they do have a deal with a simulcast with CBS for the big events. So, and that's on a lot of kind of more basic cable packages.
Yeah, I guess I would just, when I think about it, it is going to, I didn't necessarily find anything within the structure that says what kind of incentive structure there is. Does the UFC have to hit certain metrics to actually retain all the value of the deal itself? And then the only thing I did pull is that over the course on the latter years of the streaming rights deal, it slowly, gradually increases. So the expectation is that it does continue to grow. But as you mentioned as well, I think the big challenge also that the UFC faces is that it is very fighter dependent. I was listening to something a few months ago when Daniel Cormier, one of the Hall of Fame fighters, was talking about how the biggest pay-per-views ever were with Conor McGregor, and then that Conor McGregor-Khabib fight. So I think the UFC is still searching for that next big fighter that's going to be as polarizing and draw in audiences they did. And, you know, there's certainly a lot of good fighters to watch, but you need to have the charisma matched with the skill in order to draw people in. And that's going to be a constant problem. Now, will another fighter emerge? I think it's probably possible. It doesn't seem like you're going to just miss out from that standpoint, but you do need to find a way to keep drawing people in and have fighters that people actually want to support and follow as well. So I think that's another challenge they face here.
Fair point. And, you know, I was trying to look at this and think, who actually got the better deal? Is it Paramount or is it UFC? And for UFC, I mean, not only is it more stable revenue, it's higher revenue. So it's pretty clear that's a big win for them. For Paramount, you know, they're paying a lot of money for content. To be fair, content is king. It's inexpensive. But I was trying to think of what else they could do with it. And they do have rights to do spin-off series. Imagine like a Drive to Survive for UFC. Think of what that did to overall popularity of F1. And there's a million ways they could do spin-off series, documentaries, behind the scenes, you know, Ultimate Fighter, even that reality series. They could just chop this up a million different ways. And they also have kind of a magic number of 13 main fights a year, which is just over once a month. So I don't know about you guys, but at any given time, I have 5 or 6 streaming services, but I'm always trying to find one to cut just so it doesn't get too out of hand. And so I'll binge watch something on Paramount Plus, then I'll cancel it, then I'll go to something else. Well, now, of course, as you can see with the model with all these streaming platforms is they're dripping out episodes every week just to keep you. Well, roughly one main fight per month is a pretty killer, you know, sticking point to keep you on the platform and to reduce churn. So it's, I don't know, Paramount Plus was one that I never really would have thought of maybe a year ago. It's become one of my favorites. Something like this, I'm just telling you right now, it means me as somebody who's on the fence of having it, not having it, I'll keep it forever. Like there's no reason I'll ever get rid of it now. And back to Declan's point, I did know a lot of people that would pirate these fights when they were pay-per-view. Whereas now you've already got Paramount or what you want to get it for, whatever it is, $15. You're not going to think twice about it. I think the overall market should technically grow a lot. But I mean, yeah, is it a win-win or does somebody win more than the other? I don't know. Not really sure. Do you guys have a clear view on that? What do you think?
I think you have some good points because Paramount was the last one I got. And that one was actually a painful one. I just didn't want to pay for another streaming service. But I got it. There was some good shows on there. And it probably would have started to be on my cut list because there's nothing I'm watching right now. And now it's absolutely on my no cut list as someone
exactly.
who would have bought anywhere from 3 to 10 pay-per-views a year. I look at this deal and customer, I saved money. And, from my POV, and I think probably a lot of UFC fans now, it's still, they won't cut the Paramount Plus. I think with ads in the States, I think it's about $8 a month. No ads, I think is $12.99 or something like that. So yeah, I think it's going to be on a lot of people's no cut lists. I think the only thing that might hurt a little bit is ESPN is, 24/7 sports, and they did a lot of coverage and a lot of promo, and they have a huge social media following as well. They have a big TikTok following. I think if you look at all of ESPN's social channels, I think there's about 300 million people following them.
Wow.
So that was a lot of promo for events, right? On ESPN. CBS, Paramount does not have that kind of pull or that real extended coverage, right? So you were getting pre-day coverage Friday. Daniel Cormier, as Declan mentioned, he's doing a lot of coverage before the fights. He has his own show. It was getting, 7 p.m. sports coverage in between the NBA and NFL on fight week. I don't know how ESPN feels about doing that coverage now, right? Are they going to cut that from the program?
Yeah, level of exclusivity.
Declan, do you have final thoughts before we move on?
Yeah, I was just going to say that I think when it comes to this, it will, you said, Kev, the price and elasticity or the consumer reaction probably will incentivize more people to actually come on to Paramount as opposed to buying the pay-per-views themselves, just because it is now more affordable. It is one of those things that I think I would just throw it back to you is if you are looking for straight from an investment standpoint here, you want to find something that is highly competitive and they're growing. Their fundamentals are improving. They generated $211 million in net income over the trailing 12 months. So they're profitable business. They're decently positioned overall, and you can see the fundamentals growing. And this is certainly an add to that. Now, would you want to invest in this company as opposed to, say, the other top 10 companies on your watch list right now? Is TKO going to replace that? Or is it just another good business that maybe is worth keeping on the radar, but does it give you enough confidence to pull the trigger?
I think Pete's smiling and saying yes.
Oh, I think, in 7 years, their deal's going to be bigger than this one. I think the sport's growing. I think at the grassroots level, it's growing, and it's a monopoly on MMA. There's all the other kind of major leagues collapsed, and then I don't know anything comparable to the WWE side. So I think I thought it was such a unique opportunity for an average Joe to be an owner of, basically a professional sports league. And I think we were comparing it to the NFL numbers, which was really tough. Obviously, their media deals are insane. But I think I said on the last time we talked about this, I'm not owning an NFL team anytime soon. You can definitely start building a position in this. Oh, and the last thing I will say is some of those initial directors did well on this deal.
Yeah.
I think we saw The Rock had about 400,000 RSUs priced at the IPO price.
Wow.
Which is now up $100. So some math on that, 40 million. Yeah. in about 18
already.
months. Yeah, he's rich enough. Well,
God.
and then, when Vince sold based on his bad news before the dip, I did the math on what he liquidated it at, and that cost him $885 million by today's stock price. So
wow, I don't think anyone feels bad for him, but
no, but yeah, yeah.
Jeez. Okay. Well, we've squeezed this lemon. Let's talk about OpenAI. I want to get it back on the tech side of things. So they have raised a lot of money. They continuously raise money, and somehow the valuation just seems to go nowhere but exponentially higher. their last funding round, they raised at a $300 billion valuation. Insanely frustrating to me because I was offered secondary stock around an 80 something $billion valuation. I thought it was insane for a lot of reasons. One, if it just gave them 10 billion at a 27 billion valuation. Not too long before that, I think on the podcast at the time, we were saying models are going to be commoditized. They're all going to be training on roughly the same data. People will be switching between models, using multiple models like streaming services where you'll maybe have a certain research project and you use Gemini, then you cancel it because you got a month of writing and you'll use ChatGPT or whatever. And that proved to be true in the sense that people are very promiscuous with their models and they'll switch between them, they'll have multiple and they'll have none. But that didn't seem to slow down the valuation at all because not only did it go from 27 to 80 all the way to 300, but now there's reports of secondary stock sales from existing employees that are valuing the company 500 billion. So it's a stock that has just gone nowhere but up. I guess it's not a stock, it's a private company, but you know what I mean. So it's just boggled all minds. I've kind of given ChatGPT a break. I spent the last 2 months with Gemini. It wasn't that different of an experience, but I will say that I'm going back to ChatGPT. So clearly there's something there. Maybe let's just start with high level thoughts. They released a new model. You guys use AI a lot. Pete, do you want to start off with your thoughts on OpenAI versus the rest of AI?
Yeah, I think it's obviously still a really key component. And I don't think the question is whether it's a good product or not. It is, but is it worth $500 billion where it's at today? I still don't think so. But how are we evaluating this, right? Against what? Is it a good product? ChatGPT 5 is a good product. It just came out. But even by some of its own testing, they kind of have some interesting numbers of how it did as a developer. And, passing certain tests with a 70% mark, right? Or only hallucinating 25% of the time. So it's interesting kind of thresholds here of what success. Yeah, but look, it's great. It's pretty impressive. What was interesting is they've now kind of taken away the ability to choose models. So they're taking that out of the user's hands, which complicated some things for me who've set up
a bunch of
Yeah,
personally.
But you don't set up
Maybe
as many APIs as us. Yeah,
that's true. That's true. That's totally true. Pete runs an AI agency for the record, if you're just tuning in. So he knows a thing or two about a thing or two.
I think there are some interesting things there for us to tune, but it's pretty good. I'm pretty impressed with it. But does it code better than Anthropic? Maybe not. That's something else. And then I don't know what the long-term play is here. I think they said there's upwards of 700 million people active users now, which is insanely high. You are getting to that meta level growth, and where there's users, there's eventually money. So I think there's some interesting plays for the future. I saw this deal actually recently in front of me, the $300 billion valuation one.
Really?
So, and I was actually pass on it. I didn't advise anyone participate. So I could be really wrong here.
I still think you made the right call, but that's said no at 80. So.
But the liquidity play for them is in an IPO. And I'm just at what the largest valuation you've seen. So it's just, I think Kev, you and I would feel, okay, so at IPOs, people have been holding on for how long? And they have a chance. It's going to be a fire sale day one. So we're going to see that go right back down. And then I don't know how long that dip lasts for. But I mean, what are your thoughts, Kev, Deck?
Well, Declan, feel free to comment on your just overall thoughts on ChatGPT in general. But I wanted to come back to this because earlier you were saying price to revenue of 5 times was TKO. Well, how about price to revenue of 50 times? Obviously, your eyes pop out of your head, but just what do you think about this overall? What's your Mr. Fundamentals view?
Well, I think it's a joke. I think this is probably a turning point for OpenAI. So one, they did not deserve a $300 billion valuation. They did not deserve a $500 billion valuation. I don't even think they deserve an $80 billion valuation in this company. So I will give them props. Here's where I'll toss them a bone is, as Pete mentioned, weekly active users at 700 million. I think they probably have the highest overall consumer adoption, which is fantastic. And on top of that, when I was looking at, I think it was artificial intelligence analytics or whatever, anyways, seven of their models ranked in the top 10 for their intelligence score index. So it's still at the top. I think ChatGPT 5 is right now the standard. But here's the thing is, first and foremost, their CEO, Sam Altman, has time and again overhyped their products and then led to these underwhelming drops. And I think a great advocate overall, or kind of varying viewpoint, is Gary Marcus, who's a researcher in AI and professor, and he offers a Substack that provides a really good analytics. Now, to be fair, Gary is really hard on OpenAI. But what he points out is that these models continue to hallucinate. They continue to cost a lot of money to run. And realistically, there are so many alternative options out there that it doesn't necessarily sway you one way or another. The other part of it is that OpenAI is not Meta. They are not Google. They're not Apple, Microsoft, any of these companies that are generating over $50 billion in free cash flow a year. OpenAI is projected to generate $12 billion in revenue annually this year, perhaps even 20, I saw. But they lost $5 billion last year, total net loss. And Sam Altman has reiterated that he's comfortable operating at a loss. The thing is, not only is Sam and OpenAI facing this problem of trying to create a profitable product, but now they're facing giants like Meta who are poaching. And I know we're going to talk about a lot more about that later, but they're pulling top talent from this company. And where's OpenAI going to get this money from? They depend solely on raising capital from outside resources. And their primary funder right now is SoftBank, who, if you're aware, the CEO and founder of that is Masayoshi Son. And I don't know if you've reviewed his track record of investments. He's had some big winners and built some popularity, but he's also had some terrible busts. And the guy has lost like $40 billion in a year just from terrible investments. And I think the same is true here. I think SoftBank is a very aggressive investor. They don't really care about valuation. They're big on investing in trendy technology. But when it comes to the fundamental standpoint, a competitive advantage, I don't see anything that sways me one way or another from these other models, especially over the long run, when these companies with a lot more capital and organic free cash flow can continue to invest and grow where they don't depend on outside resources to make it happen.
Nice. Nailed him. I mean, yeah, Masayoshi Son, he went big on WeWork, believing it was a, what was it, space as a service technology company. You know, he totally fell for that. And if you've seen that, what's that series? God, that crashed.
Speaking of streaming, it's on Apple.
Series. It's on Apple. What a great series. But then he nailed it on AMD, and he made an absolute insane amount of money on that. So maybe it's the power law where you expect, 6 or 7 investments to flop and the remaining, 3 or 4 to more than pay off your losses and give you have you come out ahead there. So yeah, like you said, we will talk more about, recruitment, but, I'm wondering, I'll put this to you guys. With this secondary sale, if you're an employee, you've been there a long time, you can now sell your shares at a $500 billion valuation. It's insane. What do you think that does for recruiting? We'll talk more about that after, but in a very competitive market where everyone's trying to keep their employees, does that help retain employees? Does that help bring in new employees? Or does that kind of throw things off by giving these people some kind of ability to have less skin in the game? How do you guys feel about that? You can both respond. Pete, you want to take it away?
I think as it climbs, it starts to become a hindrance, right? Because the blue sky is already kind of there at 500 billion, right? And then you don't really have the same liquidity that you might get when Meta's recruiting you, or Amazon or Google or Microsoft, where you're getting options that vest that, you can sell on an open market. You're kind of relying on this potentially having a liquidity event. And if you're getting options today, it's a really high valuation for those of something that isn't doing the same revenue and isn't as kind of established. It seems like the team over there, Sam, quite a bit. He seems like an interesting guy. So I'm sure they got something going on there. But yeah, I think it's starting to feel like a bit of a hindrance on maybe some of this recruiting. And you are seeing some people getting poached for, as we're going to talk about after, astronomical amounts of money.
Yeah.
I think we're all dying to talk about that.
Well, I'll just say, I'll push back a little bit on the Sam Altman piece, because I think I always use my gauge as, I'll call it, what would Warren Buffett do? And he is a big proponent about integrity and transparency. And On multiple occasions, Sam Altman has said that they either have AGI or they're on the verge of AGI. And this is going back to GPT-4 and when they were releasing their reasoning models. So whether I'm an employee, a shareholder, or another stakeholder, and I'm hearing somebody overpromise and under-deliver consistently, that starts to wane my confidence overall in that person. On top of that, when you're talking about the stock option deal or being able to sell your shares, that's another big proponent that if people within the company, especially major players, are liquidating their positions, what skin in the game do they have, as you said, Kev? Ultimately, as an investor, I want to be aligned with the CEOs and the people managing my investments and ensuring that we are both headed in the same direction. If you give this option and everybody liquidates, like you said, what real incentive do they have to continue things going if they have this big pile of cash that they can go sit? And maybe now on top of it, because they've liquidated it, now they don't really depend on OpenAI as a company. They can even go and search more deeply into finding another project or another company that aligns with their interests. Another, just on top of it, Sam Altman's co-founder, Ilya Sutskever, I'm sure I botched that last name, but he left and started his own company. I think there's been a lot of internal turmoil, whereas, again, I always look at Meta in this case as a North Star to some extent. One, he owns like 20% of the business. I can't remember the exact stake, but he has a huge portion of his capital tied to the actual longevity of Meta itself. And then on top of that, he's keeping it consistent. And more than anything, they're growing their team in addition to that. So I just think that this is a business that came in at the perfect time. They kind of were the initial launch product that people first adopted, and it has a stickiness. You know, Apple is using it for their Apple Intelligence. Microsoft has a partnership with them and continues to push it out. But it's not in the same capacity that, say, Google's search engine is, where they actually generate ad revenue. They solely rely on people subscribing to these models, and new models come out all the time. So why the heck would I spend money on, say, a lower version model if something is going to come out? Or the alternative altogether is there's a free version out there that is going to come in some period of time that is going to be on par with the latest version that they come out with. And so I just don't know where the sustainability is from this business. And I think they're just riding a huge wave right now.
Well, that's a great point, what you said about models becoming free or, you know, because for example, when I first started subscribing to ChatGPT Premium, the only reason is because two reasons. One, I was hitting my limits. I couldn't do any more in a day without getting throttled. I couldn't upload enough PDFs for it to be actually useful to analyze them. And I couldn't do image analysis, which I really have used heavily. So I had no choice, but I subscribed. Gave it a break to try Gemini just because I was having too many hallucinations with ChatGPT. Switch to Gemini, found out is pretty darn similar. Like there's pros and cons on each, but it was like close enough that it did what I needed. And was talking to my brother about this, and he mentioned that he was doing image analysis for free now on a free model with ChatGPT. So now all of a sudden that core reason why I subscribed isn't there anymore. And what that makes me think of is it's just showing how competitive it's getting and how people are willing to try all these different models. And I agree with you. I didn't think it was worth 80 billion when I was offered that secondary stock. I definitely don't think it's worth 3 or 500 billion. I'll give them all the credit in the world. It's an excellent product, but we're on the fence of, we keep talking about, you know, hiring and all this, just hinting at our next topic. So I want to just go to it because Meta is spending an insane amount of money. They're delivering potential packages to entice people to leave other companies like Google and OpenAI, mostly OpenAI, that are in some cases $100 million plus. Now, mind you, that includes a combination of equity in Meta, bonuses, including a signing bonus, et cetera, et cetera, et cetera. So it's not just 100 million up front. But these are some pretty high caliber employees that are getting snatched from OpenAI. So we're just talking about what's the secondary sale going to do to employee retention? Well, doesn't seem to be hanging on to everybody. Declan, I'm going to let you start this one off because obviously you're very enthusiastic on both these stocks. You're both a bull and a bear, and we know you love Meta. So just give us your view on the strategy. They're spending a ton of money. They're trying to build a moat. Well, how do you think this is going to end?
Well, the saving grace for Meta that OpenAI doesn't have is that they have a profitable business and a highly profitable business that is not tied to their AI already. So they have a product and service or a platform that enables them to continue to generate cash and then put additional capital, and not just small pennies worth of capital, but towards these AI investments. And Similarly with their XR investments too. So there's a lot of opportunity there. The company itself generated over $50 billion in free cash flow just in the trailing 12 months. They have $78 billion in cash just sitting in the bank right now, and they're generating over $179 billion in revenue. So it's a very different business from what OpenAI is today. And so now the big problem that any of these massive companies face is, what do we do with all that extra cash? You can buy back stock, you can pay a dividend, you can maybe acquire different businesses, you can invest in projects like this. The good thing is that is exactly what they're doing. And this is where I would give praise. I've been an investor in Meta for a long time now, but the big thing is that when you're in this position and when Meta's willing to make these high stake bets and invest in people, who knows if it's going to turn out? Ultimately, they could build a super intelligence team and it all flops, and it would be perhaps a major disappointment. But at the end of the day, they're going to keep churning. They're going to still keep making money, and they can pivot in whichever ways they need to. So that being said, when you look at who they've acquired, whether it is they got Alexander Wang, who is the fastest self-made billionaire at just the age of 24. And when they purchased a 49% stake in Scale AI, he is now a key player. Nat Friedman was the CEO of GitHub, who, as many coders and programmers, computer scientists are well aware of, is a highly valuable company that makes it very accessible to be able to pull open source coding and streamline your process. It's one of the most successful businesses of the late 2010s and continues to be a very highly valuable asset. The list just continues to go on and on. They got the co-founder of Ilya Sutskever's company again. He left their company and joined Meta. They also had Apple's leader of foundational models come and join. And it just continues on and on, whether it's from OpenAI, different places, but they have the money to spend. And to them, everybody's talking about, oh, well, they're getting these $100 million packages. Wow, that's a lot of money. But for them, it barely even moves the needle. They could do this 10 times over and not even flinch. And so from that standpoint, because they're taking that risk, they differentiate themselves from Google, Apple, Microsoft, all the other companies that are kind of moving at a much slower pace. Will it turn out? Who knows? But at least they have that other business that keeps them going.
Absolutely. Yeah, Pete, what are you thinking?
Wow. Well, Declan seems like a very well-researched shareholder.
He loved it.
Yeah. And I was very bearish on them. I think we may have spoken about them 18 months ago, and they've probably more than doubled since then. I think I became really bearish on them around 2022. The whole market was dipping, and Mr. Zuckerberg was just going all in on the metaverse. And that had compounded as, again, a first-party user of their ad platforms, which just tanked due to the iOS data sharing. So their ads became garbage. We weren't able to do anything at the agency. And their ads are rolling now. They are really, really good. They're better than probably ever. So that's going to get, if our clients are getting returns on that, people are going to keep spending more money. So their targeting's got a lot better because of data. Their ads will only get better the more people use any of their AI, because they're getting more information on the users, and you're going to get even more personalization and more predictiveness. So, and what's really interesting is I just kind of look at them in a category of their own. Who are their biggest competitors? Maybe YouTube, but I think when you look at the demos, it's very different. And then TikTok, which anytime they get brave, maybe they'll just get completely kicked out of the US. So I think it's really interesting. I was really wrong about them, and I was led astray by Mr. Zuck and his doubling down on the metaverse. And now these CapEx investments are pretty insane. They're going all in. They're building data centers the size of Manhattan, spending $60 billion on these things, and then offering $100 million signing bonuses, which for some reason, when you hear about a professional athlete, you've been conditioned. But when I hear about it from a computer engineer, you're like, wait, what do you mean?
Yeah, right.
What are you doing for that money?
Yeah, it's crazy.
Yeah. So I think the future is probably continuing to be bright over there. It seems like they're investing in the right places. I don't think they have the same kind of threat that ChatGPT is to Google. I will say, I know we switched topics. What is interesting though, is I can see firsthand with a lot of client data that ChatGPT is getting into Google's search monopoly for sure. It is driving a lot more traffic, so it'll be interesting. But Meta how you guys use their products, it's interesting. And they are starting to build a really robust team.
I would say as of now, Meta's one of the only major models that I really haven't spent much time with, other than just going to meta.ai and just playing around and making images and pretty basic stuff. As far as I understand, they don't even have a reasoning model yet. So I think that's part of the reason for some of these key hires trying to catch up fast, I guess. So some people say they're a little late to the game. For example, they don't have reasoning models. Others are saying the game hasn't even started yet. They're just trying to really speed up the 0 to 1. I don't know what to think, because you go back to whatever you said, it was just around COVID, just after COVID, when it was Meta Zuck. I think that was pre-cool hair. And he was going so hard on the metaverse. And the big difference then is that all of his competitors kind of weren't really. It was really Zuck was Meta Zuck, and really trying to forge a path in this new thing that still is intriguing, but obviously and ultimately wasn't really supported by Wall Street, wasn't supported by Main Street investors. And ultimately, it seems like it's been downplayed, and that part of the business still loses money. Then there's this kind of major spend that they're putting on, where it's almost like on the one hand, they have no choice, because all of their competitors are going so hard. All the numbers for CapEx that Meta's putting up is matched, if not surpassed, by like their peers. So they kind of have no choice in that matter. And the question is, how do you figure out if it's all worth it? They weren't selling reality headsets. People weren't signing up to be part of the metaverse so much. You could tell it just kind of wasn't going the right direction. AI, certainly people are signing up, but it's definitely not a revenue play yet, because the costs are so expensive. You are kind of seeing some efficiencies within their companies. Like I think you mentioned, Pete, the ads targeting is better than ever. Apparently a lot of that's AI helping them out. One kind of thing I look to is, well, what kind of investment or return are they getting on previous investments? Well, as of like late 2024, Meta was sitting somewhere around almost a 30% return on invested capital. Like that's a juicy, very strong number. So it does show they know what they're doing with their money. And while there's somebody like Amazon, you could see them putting money into their data centers, and then Azure, that's Microsoft. You can see their Google Cloud up, I think it's 30%. So serious return there. Meta, it's not quite as easy, because I don't think a lot of people are subscribed. Can you even subscribe to a paid model for Meta? Do you guys know? I don't even think you can.
No, but I don't think that's the angle they're going.
Well,
I have to guess.
Clearly not.
Yeah.
So it's just interesting that it's just, my point is, it's harder to judge. You see all this money going in. I don't really know what the end goal is. So Zuck holds control of the entire company. So either he's making a masterful move in the background, or he's going all in on something that might just blow through all their cash. I mean, do you guys have a strong view on that?
Yeah, I think he's going the generative advertising route. I think when you look at the data they have, that's proprietary to them. They would have to have the largest photo gallery in the world that's been described, right? That's, that can educate their models on how to create certain images, and probably more visual advertising data than anyone else. So what actually is the perfect ad for a user, and then generate it for that user in real time. I think that's the future of Meta. And that can be video or image or carousel, because that's all unique to them. And they have information on what actually works and what's sold because of agencies. And then I think they're looking to cut out a lot of the creative world. There's some quotes on him hinting towards this, but I can see where their unique data set lives is they have more images than anything. And they've had more video, probably. I know YouTube and Google's up there, but when I really think of rich image ads, and when I really think of video ads that work really well, that lives on a Meta server, and they know the success, and they're able to cluster that data, and they need very smart machine learning guidance on how to set that, and what will generate the perfect ad for Kevin, and what will generate the perfect ad for Declan, and what will generate the perfect ad for Peter is probably the future of Meta, and that happening in real time. I think we will see generative ads that speak directly to us, and Meta will be the creator of it.
Very interesting.
Yeah, well, I'll flip it on its head entirely, actually. So I've owned this company. I am still bullish overall, but I would say that what they are doing and Zuckerberg's decision overall is not the right direction. Now, you are going to invest in AI. And I think, as Pete mentioned, the accuracy of advertising is benefiting to some extent from what they're doing in the background. However, the gold mine when it comes to AI is ultimately setting up your business so that you can reduce capital, whether it be human capital or, just the number of assets that you have in order to operate. And if I was a CEO and I was trying to run a company, I would want to get to a point where I could fully automate my business, where I had full trust in my AI to run it operationally at a fraction of what it costs, because I'm paying, again, people $100 million pay packages right now. If I can get to a point where that can just be automated because I trust the AI, that is a much better thing. The problem is that all these leading AI companies, their enterprise customers do not have full trust. You can use AI and you can benefit from it, and they continue to use, say, predictive analytics and machine learning in order to optimize things, but it is never going to be perfect and you're never going to fully trust it. And that is a fundamental limitation with the architecture of these models altogether. And we can open a whole other can of worms of a different approach of AI. But when the key comes down to is I want to be able to operate autonomously, and I don't think you can do that. The big thing is that when it comes to Mark Zuckerberg or any of these companies right now, is they are in a major sunk cost fallacy right now. They are investing heavily and they will not stop, as you mentioned, Kev, because it is an institutional imperative where all these businesses are doing it and investors are pushing for it. So we are going to continue to invest. We're going to buy these data centers, even if in the long run, it is not going to be the optimal approach. And until it smacks them in the face, they're not going to realize that it's happening. And so while they continue to spend and do all these things, I generally think it's a poor decision. But at the end of the day, they are saving grace. And I know I already said this, but they have a business model that already continues to be profitable and generate money. So even if it's a massive mistake, they're not going to be in a situation where the business goes bust. They have $78 billion of just cash sitting around. If anything comes down to it and their stock plummets, whatever, maybe they lose their entire business, like they're still in a position to survive, where a lot of these, especially startup companies, including OpenAI, will not be in the same position if the market turns. And again, altogether, people realize, oh, we've been doing it all wrong. We've been investing in the wrong thing. Hold on, there's a way better approach that is making way more money at a fraction of the cost, and our customers trust it far more. So it's just one of those things that, I've continued to hold the company because it continues to generate cash, but is it the right decision? I don't think anybody knows the answer to it, and it's tough to predict if it will turn a profit in 5 years, 10 years, who knows? But I think there is better alternatives that will emerge eventually, and this is just going to be a great moment in history where everybody's going to be look back and say, this is the downfall of large language models and machine learning, and not necessarily the downfall, but a turning point where everything starts to shift a different direction.
Well, it could be exactly that. What if it is the downfall of LLMs and all this money has gone towards these giant models, and then all of a sudden someone like Versus AI comes out and proves that there's a different way to do this that doesn't require all of this training data. And then all of a sudden this money that you spent is now, has no resale value. I guess that's the big fear. And I guess that's what we got to figure out.
I think they're taking a different angle. I know what you're saying, Declan, for sure. But I just think, though, from what I've heard from Zuck and from what I kind of know is possible, I think there's no one really in their space, right? So Google, I forget I'm drawing a blank on what their video product's called. It's pretty impressive, and it's powering some of the other ones that are out there now. Even if you were to use Veed video editor, which can create generative video, really good. But I think Meta has a real competitive edge on what it's going to be able to do in the generative image, video, and ad space that I don't think the other players are investing as heavily in Meta. So I wouldn't look at it as an LLM ChatGPT. I think they have an interesting niche and probably where they're going and how they're going to kind of target it. I think they're all starting to kind of have their own strengths and weaknesses. And yeah, some are going to disappear for sure. I think some things that we've seen today would be really interesting to see where the OpenAI ends up on it because of how they're running it from a big loss perspective. And when the market, turns, which which it will on this. The money's going to dry up somewhere. So I think that's still why the Googles and Metas and Microsofts, because of all the reasons you mentioned, right? They have this cash sitting around. But I think Meta's actually a more interesting play than I would have thought a year ago.
Yeah. I'll just
Well, I can't wait to come back on this in 2 years.
I do have I'll pose this question to you guys from this standpoint, because there's two things. First is Google just released VO3, which now allows you to traverse openly generated worlds. Okay. Tencent did the same thing. So let's say that this is the new frontier, and I believe Meta could use this, maybe even for their XR. What if you just had games that you could actually interact and now fully be immersed in that sense? So that's one cool, but is that the frontier of what generative AI can do, is get to that point? On the flip side, from an advertising standpoint, I just still don't think that the trust is there, because here's the thing, is if it is fully personalized, you may get in situations where the bias of these models leads to highly detrimental ads that come out. You will find things, or maybe it generates something that is racist or misogynistic, all these different things that could be problematic, where what you're essentially doing is saying, okay, well, maybe these are all hypotheticals, what ifs, but a company like this has to consider it, and then they have to put constraints on their models so that it doesn't actually produce these mal advertisements that lead to things that crush the stock. So I just think it's, throwing it back to you guys, do you see this, if the models continue to face the same problems that they do with hallucinations, with data bias, all these different things, will we ever get to a point with these companies where you can actually fully trust, like entirely hands off the keyboard or off the wheel or whatever, and just let them operate freely and be confident that you're going to get the result that you want?
Yeah, good points. I wouldn't say any agents that we use right now, we put on autonomous mode and let it go. But for a lot of things you said, guardrails are getting a lot better. It would be interesting, because you're just, okay, wow, this random user is just crushing Andrew Tate content. Now let's sell him, a pair of sneakers, and this is what the ad's going to be, right? I think that maybe where you're going. I think at first there will be stages and approvals and things like that. I don't know if you're going to go fully autonomous off the get-go, but maybe one day for sure. Yeah, it'd be interesting.
I think probably not as far away as we think either.
Mm-hmm.
Like, that's just a guess. Certainly not there now. Like, the fact that I have to run the same project through 2 or 3 different models just to confirm it's getting the same answer is just inefficient and annoying, especially when you're doing it in finance, and one small, inaccurate detail can completely ruin an entire report. So I'd say, yeah, definitely don't trust any of it now. It's more just like for helpful writing and organization and some basic math. Honestly, sometimes not even basic math, but I think that it's only a matter of time before we get to a point where either hallucinations don't exist, or the data is actually perfect at a certain point, or eventually it's just going to start thinking like a human and know how to recognize errors and fact check itself. So it's not there yet. I would think that with the level of money going into it, we should be there soon enough, especially when you see how far we've come in the last year. But hey, maybe episode 543 we'll be discussing this, and we'll know for sure.
Our avatars are going to do a great job in that episode.
Yeah, exactly. But hey, for now, this is episode 24. We have squeezed this episode. There's a lot of good info here. Good to see you guys back in the studio, and I'm excited to do this again. We'll be back in a couple of weeks. So for now, it's the guys from Edge. Beauty. Okay, guys, welcome back. We got the full cast with us today. This is episode 24 of the Beyond the Edge podcast. Oh, hold on. Recording didn't start for Declan. What the heck? Weird. Please try again. Weird.
Yeah,
What?